The news of OPEC finally agreeing to lower its oil production after 8 years saw a quick surge in oil prices, with gas and oil counters registering increases in their shares. OPEC, or the Organization of Petroleum Exporting Countries, agreed to the cut during a meeting in Algiers overnight. While some doubt the oil production country leaders' commitments, local players from the oil and gas supporting industries are hoping the best from the move. In KL, the share market saw small increases across the oil and gas counters in line with the trend globally, while the depressed supporting industries have welcomed the move. Nurujana has the report. With the recent easing in oil price, along with the big boys like Petronas, Shell and Exxon, the supporting industries had also seen a high drop in sales and contract values, slashing billions of ringgit worth in capital expenditure. National oil company Petronas alone plan up to 20 billion ringgit cut this year and lay off thousands of its workforce.
If OPEC does what they say they are going to do, I think everyone is happy because there will be some crude oil price stabilization. But I have my own doubts that they will actually honor whatever they say they are going to do. I see this as a new normal. We are looking at least for the next couple of years with low oil price. That could be a bad and it could be good as well. It could be a bad thing and a good thing at the same time. Because what that means is, especially in our business, manufacturing, the cost of energy will be slightly cheaper, the cost of raw material will be cheaper, but at the same time then the competition will go up.
For test equipment provider, Firm Test Electronics Malaysia in Berhad, it said sales dropped between 30 and 50% following the stiff economy environment and strict spending by the oil and gas companies.
Our company now is not depend a lot on which being in oil and gas, and then we go to maybe another industrial like manufacturing or power and utility, something that we see that there is a potential.
If they are not going to have a collaboration to bring down the production so that the price can improve, it's a threat, or it's a what I call it. It's not good to the industry actually, generally. So people is cutting down, throwing the price, something like, you know. Again, this is a business cycle. I believe it won't be forever like this. So it can be $100. I think it will slowly come back again, because now it's like supply is more than demand.
When it comes to oil prices, some businesses may suffer, some may capitalize, some are not affected. What I mean to say is, for example, like Bestera Resources, we are into new technologies. So we're always finding ways how to economize operations, cut costs.
A slowdown in economy as well as a global glut in oil supply caused oil prices to crash over the last 2 years. Following the OPEC announcement, which is expected to see a reduction in oil production in the ranges of 32.5 to 33 million barrels of oil per day from 33.24 million, oil price surged by more than $2 per barrel overnight. However, the early euphoria turned to caution and prices have since retreated as of Thursday afternoon. The Brent crude fell 46 cents to $48.23 per barrel as the market wondered how OPEC members' production cut would be implemented and also whether other producers will go along with the move. There is also a possibility that US shale oil producers who were seen contributing to the glut in crude oil would increase production.